What's up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And today I wanted to bring something to your attention real quick that is kind of concerning. I mean, it's a good thing for me, but it's concerning because it is a very bearish indication. On the 1 day chart, and I just kind of noticed this just today, I'm looking at a bear flag that is forming out of nowhere, and I wanted to talk about this and compare the action on the 1 week chart and then to this 1 day chart. So first, before I get into this bear flag, I want to run to the weekly chart and just kind of look at this previous bear flag that we experienced, where we had this downward action coming off of this second peak of the major Bitcoin run, and then we went into this up and down for several weeks, making this huge bear flag, where with this bear flag, and we had talked about this before, you had kind of a flagpole that you could either start from up here or you could start it from down here. But whatever the case, this is what that flag kind of turned out to look like. It's the upside down version of the bull flag. And then of course we had that point where we broke the bottom of the flag. That was your breakout point, the breakdown, and we started to dive down where we're headed towards this 200 EMA, and it looks like the correction is still going on. Of course, we are in a bear market. I don't think there's any more arguing about whether or not this is a bear market or a continuation of the bull market. And I'm thinking anyone who thinks that this is still the bull market and we're headed towards an all-time high within the next several months or even this year, you're probably smoking crack. All right, now let's just clear that, and now we can jump into the 1 day chart. And on the 1 day chart, you're going to see this come up, because on the 1 week you don't see it, because all of the action that is creating this miniature bear flag that's a little bit more, I wouldn't say on the micro scale, but on the it's still the big picture with the day chart, but not like the 1 week. And that means that when we dive out of that bear flag, it may not have such a catastrophic effect that we saw happen here, where we had how many weekly candles close red? 1, 2, 3, 4, 5, 6, 7, and this would be the 8th. This one hasn't closed, but the 7 set a record for Bitcoin. I believe we've never had 7 weekly red candle closes in the history of trading Bitcoin. Keep that in mind. So run into the 1 day chart. Here it is. Let's move this up and let's check it out. We see our previous support resistance zones that are up above, and of course we failed the bottom one, and there's nothing left down here. I don't even have any left, because the last one was here at the $32,000 level, and we've already failed that. So then when we look at this action here, we see the bear flag. Let me scrunch this in a little bit more, and then I'll try to draw it out for you. And this could play out very soon. I mean, it could be days or it could be weeks. We don't know which one, but it certainly looks like to me that we have a flagpole here, and that we have a top limit right here, a bottom limit somewhere around here. This is just rough. We don't know how far, like I said, that it's going to play out, but we'll just put an end on this flag. This is a bear flag. And all of this side banding that we've been looking at the last several days, notice how it's centered on this volume node right here, where this peak volume node is at 30,178. And for those of you that don't know, the VPVR, I'll put it up here, stands for Volume Profile Visible Range. And this means that you are being shown on this sideways chart how much volume of Bitcoin is being traded at a particular price instead of for a particular time period. Now, looking over here on the regular volume, when we look at, say, this red candle right here, that tells us that we had so much volume up to this point on a 1 day time period. So for this 1 day, this full day, that's how much volume of Bitcoin is traded. On the VPVR, we're looking at something completely different. And we're saying for this visible range on the chart, meaning from the current date of May the 21st and running back to the 15th of January, okay, or actually that's the 15th of December, for all of the trading activity that is visible on this chart. And if I scroll in and scrunch it in, it'll change the VPVR. If I scroll out and have some of this trading activity go off the left side of the chart there, it changes the VPVR. That's why they call it the visible range. It's dynamic. At any rate, it's telling you that this much Bitcoin was bought and sold at the price of 30,000 for this entire time period, from the 15th of December to the current date. And we usually see price wobble around and snap to these volume nodes. Now, previously, we had this big volume node right here at approximately, this is the point of control price. And let me put that up on the screen for everybody. We're going to call that the POC. And that's the strongest volume node on the VPVR for this visible range. The most trading activity for this visible range happened at this price. Now, let's get that price again. It is at 39,000. And when we dipped below that, when we broke out of the previous huge bear flag on the weekly, as soon as you fall away from that POC in this volume node, we head into what I call a slip zone. A slip zone for me is when volume starts to decrease and you get to one of these dead spots and you start falling and your momentum is quick and strong. And when you hit that slip zone, you can quickly snap to the next volume node. That's why you see side banding, side banding, side banding, where we're sticking to the big volume node here at the POC, and then all of a sudden you have a violent drop down here, okay? That's the slip zone. And then we end up stabilizing and trading back and forth at the next volume node. Isn't that fascinating? All right, so what could possibly happen, and we're talking not definite, okay, and this is not financial advice, but the probability for a formation like this is that you're going to break out of the bottom of this flag and have another drop. And the way that we decide how far that drop can go is by measuring the height of the flagpole and replacing it at the point where it breaks out, and then we extend that on the chart. So let's try it. Let me scrunch this in a little bit because it won't fit in here. And then that'll let us know that if this is a bear flag and breaks out on the bottom, we could possibly land at a particular price. Okay, so let's make our flagpole. Let's just start it kind of right here. And this is a rough guesstimate. It's not definite. We really don't know. And we're not for sure if this is a bear flag, but we're just going to do this and try it out. Let's make our little top here and try to get this moved down where it has all of the trading action within it. There we go. And then we'll put our little right side on the flag just to make it look pretty. And now what we're going to do is get a measured move. So we're going to take the flag and pull it out. And we're going to replace it where we would potentially break out, somewhere down here. So let's just stick it right there. And then we notice that this coincides with the price of 20,000. That's why you hear a lot of people saying that the bottom is going to be 20,000. Now, there are several ways that we can make this flagpole. Some people will say that the flagpole has to start in a different place than what I have it. They might say, well, here, after that big red candle drop. So when we put it there and then replace it to the breakout point, it's a little bit higher, not much. If we stick it somewhere in here, and it would maybe be at, there's no volume over here to support it, but maybe 21, 22,000. I've heard some people say 23. So you just test it out and try to see what's possible. If we change this yet again, maybe we can start the flagpole here at this point. So let's see where it breaks out and then ends up there. It's still not much above that 20,000 level. We would probably be in the 22 to 23 zone. And this is not exact. And again, it's all about probability. And the best we can do is say, hey, what is the highest probability? And then take it down from there to least probable. So there is a chance that we break out of this and go up. Let's just put an arrow there. There is a probability that it could do this. We could all be fooled. We can jump back up to all the way to the point of control price, or we could jump up to the 50 EMA line right here that coincides with 36,000. That's why you hear a lot of people on YouTube talking about the $36,000 price, because that's where we meet up at the 50 EMA. So that's probably of a lower probability than a breakout to the downside. So this is your higher probability is breaking down this way. And I think of highest probability would be at least a break to, maybe 24,000, and then 23,000 next, and then 20,000 third. So I'm thinking if I've got to judge probabilities, this is most likely, next likely, next likely, least likely. That's how I do it. But it doesn't mean that any one of these scenarios can't happen. But if you're playing with the probabilities, your chances of making a gain will be a lot higher than if you're just blindly buying and selling. Now, one other thing that I can tell you that is a good indication here of the fact that we might go down and not up is what we see on the stochastic. We have a stochastic rise. We had a crossover bearish, a fake out, a return back to bullish. But what do I always say? When stochastic is on the rise, look at what's happening upstairs with price. So as we're rising, price is not moving. It's still going down. Do you see that? That's a divergence. Also, on the MACD, we notice that we're printing green bars on the histogram, and we have a bullish crossover of the MACD oscillators. But what's happening upstairs? We're sidebanding, and price is going down. That's another divergence. So let's put these arrows on here so you can understand this. This is moving up. Wait a minute. Let's go green. This is moving up. This crossover is positive, moving up with bars on the histogram going green. But price is going down. That's a divergence. That's a bearish divergence, which tells me that once we fall off of this volume node right here, that we'll hit this slip zone, and then we could drop down to the measured move of the bear flag. Now, like I said, it could take days or weeks. We don't know, but let's keep our eyes on it and just watch the action and be smart about what we're doing and use that to analyze and evaluate your risk for your trading purposes. So that's all I got for this video. I am super glad that you are watching, and hopefully you are learning. And let me know if these basic technical analysis lessons that I give, if you like them, and I'll keep them up. And I would also like it if you would like, comment, and subscribe, of course, to the Crypto Pro channel. And thanks for taking the time out of your day to join me. And if you find this super beneficial, feel free to give me a super, what do you call it? A super hello chat, something? Well, it's a gift. If you want to support the channel financially, you can give by clicking that button below to give what is the equivalent of a super chat, but not on a live stream. So I thank you very much for being here. Yet again, stay tuned, and I will be back for more. That's all I've got. This is Carlton, and I am out.